starting the show early today, Danny, but I've got a lot of things on my mind, things that I think can help stock nerds. I don't know about making sense of the markets per se, because if you try to figure out why the market's doing what it's doing, you're going to be missing moves. Like you'll miss the upside, you'll miss the downside. But to help stock nerds understand, break down some complexities, like terror attack yesterday took the lives of some Marines and soldiers and a Navy corpsman, and all horrible. But the markets are still elevated at highs, and a lot of people can't make sense of that. Like they don't like why isn't the market falling to hell in a handbasket is a legitimate question. I know that a lot of investors will ask today, and we're going to talk about that. Okay, we're going to get to a bunch of things. We are when I say we're financial escapism. Okay, I don't mean that we make things up. I mean that people come to this show, one, because it helps them make or save money. Like there's fantastic, relatable, actionable information that we provide. Okay.
Yep.
They come because we follow up with what we talk about. Because it's not just like when people go on CNBC or I view Bloomberg as a little bit more macro.
Yeah.
The economic indicators of the FTSE Nikkei are going to be like that. Information doesn't help you. And when people just throw out stock ideas, you just forget. Like it's a deluge of information, and you can't make heads or tails of it. But before,
not only that, sometimes it's biased because they have their advertising.
Oh yeah,
pushing stuff.
Hell yeah,
pushing product.
And so all of that we're going to get to. Okay, and I don't let me forget a fantastic stock nerd. She asked me, "Hey, can you show me really quickly how to pop out the screener on ThinkorSwim so I can do what you're doing on your videos?" Yes, we're going to answer all that. But now, Zach,
Tim.
So Zach and I are talking, and I'm humming a song. So Remy, my little guy, the Remster, loves Pete the Cat, right? And they just reincarnated Pete the Cat as a cartoon. I don't know if he was a cartoon before, but it's KT Tunstall, it's Diana Krall, and it's Elvis Costello, and a bunch of other people doing the voices, right? Musicians, yes. So they're actually, and Pete the Cat's a musician. And anyway, so we listened to the Pete the Cat soundtrack on the Amazon Music on the way into daycare and back every day. Like I got the whole soundtrack mastered. He knows all the words.
So it's playing in your head.
Oh hell yeah! always.
And when you're going to sleep.
Luckily, I like this one. So by the way,
that's got to be better than Barney the dinosaur. Which
purple dinosaur.
I feel bad for the people that had to endure the Barney.
Yep.
Man.
I did not have to endure the Barney. I'm glad that
I love you.
You love me.
Yeah, I'm so good. Like the whole world is evolved to this. Like it's really good. By the way, if you get Disney Plus or just Disney Channel on your cable platform, the cartoon Bluey, which is an Australian cartoon.
Yeah.
Oh my gosh, Bluey is the best. Bluey is if Homer Simpson did television, like for kids, not for adults.
Like simple-minded stuff?
No, it's fantastic. It's a family, but there's jokes in there for the parents.
Okay.
Yeah, like the dad's getting kicked in the dad parts, right?
Okay.
Yeah, and like because every dad's been kicked in the dad parts by their kids. Yeah, it's like a rite of passage. Like, did you get your kick today? I got my kick today. You're a dad. And so, but Bluey's, I'll tell you what, Bluey knocks out. You can watch Bluey, and like I can see Alex doing curls for the girls, watching some Bluey. Like it's a good show. And so, because that's the only reason why Alex does curls, right?
Alex can get confirmation.
Right. One-liner Alex. Seriously.
Yes.
Like I'm literally just seeing if Alex is paying attention. I can't see the fellas, right? And Alex knows, Tim usually talks about all this nonsense. He doesn't really come to me. And maybe like 30 minutes later, I'm just going to be looking at stock charts. So pay attention, Alex.
Love it.
So what's the cat's name?
Oh, Pete.
Pete
the cat. Pete the cat. And so anyway.
So who wins like in a wrestling match? Barney the dinosaur?
Pete the cat. You know why? Because Pete the cat's one groovy dude. Like Pete would look at Barney and figure out, dude, why don't we just play some music together, man? Like Pete the cat is the best for Remy's personality because Remy he's not really intense. Like he's just like happy-go-lucky. Like, and Pete the Cat's like, man, we're gonna take all this in stride, and that's what you want, right? Because I mean, look, the intense personality, the always high-strung. This is not Pete the Cat. Pete the Cat is like, hey man, let's try to figure it out.
It's groovy.
Yeah, it's groovy, dude, and like that. So I really enjoy that. And then you know what? I'm going to give a nod to Daniel Tiger's Neighborhood too, because it hit Daniel Tiger hit Remy right at the right place where now he. So let's rank them. It's going to like for adults, right? We're going to rank them for adults. Bluey, Pete the Cat, and then Daniel Tiger. But for your kids, they're all gold medal winners because there's no losers. Dan. It's 2021, baby. We all won. So you know how that works.
That's right.
Yeah. And so anyway, real quickly. So KT Tunsil. 1 second.
That was a song we were listening to before the show.
Before the show, she's saying, "What is the title of the song, Zach? Black Horse." Let's sing it together. Something on a black horse near a cherry tree. Woohoo! Like I've got that part. Yeah. So everyone's heard this song. Yeah. Like, well, she says, no. It sounds like a date. No. You're not the one for me. So I do know that part.
Yeah.
Okay.
Yeah.
Okay.
So KT Tunsil is the artist that sings this song. Turns out she's my age. And she's from Scotland.
And she's what?
From Scotland. I
Scotland.
looked all this up, right? So here's KT Tunsil talks about her one song is Black Horse Cherry Tree, right? 2003. So Kate talks success as a cat versus a human musician. Look at your screen. Can you see your screen? Like
Yes.
that's a bad headline. But
Yep.
she's amazing. So I'm like singing all these songs while Zach's getting the studio set up for the show today. And then I'm like, oh, Zach, you know this
Play it,
artist.
yeah.
And we start playing the music. And I'm like, what the hell is this song about? What is Black Horse and Cherry Tree about? So then Don says, what you guys talking about? I'm like, I'll tell you when the show starts.
That's right.
Shocker on a Friday. Nothing Jay Powell said was shocking like what I just found out about Black Horse and Cherry Tree. Daniel.
A very simple song in a children's show.
Yeah. Black Horse and Cherry Tree is about a girl who becomes pregnant. The guy wanted to marry her, but she's scared of being trapped in a boring life. I couldn't even click the link to find out more. I was devastated. Had no idea that Black Horse and Cherry Tree was, does she keep the baby? Does she not want the baby? Like, who's writing about this in 2000?
What a dour song.
Right?
Yeah.
Here, I'm just bopping along to Black Horse and Cherry Tree. Alex is over there doing curls.
And that's
for
the
girlies.
background music for kids.
No!
Who knew?
Holy hell, who knew? So anyway, no, I hear an Alex laugh. Okay, we got him.
One laugh.
Yes. So we got him real quick. Stock Nerds Mark Lever. So listen, now that you're in the tent, now that I've pissed off one member of the audience who will write to me, tell me how angry you are. Show me your lightning bolt. Look, let's talk real quick. Screener. So all the ideas that emanate from the fellas like Hunter, Alex, Don, myself, Daniel, we all screen. Okay. Now, not everyone screens in a different way because, you know what? A Pete the Cat song, you got to be you. So you got to be you, and what works for you, that is a Pete the Cat song. And so you have to screen for the criteria that works for you and your trading style. And so I gave out some screening things on the video on Wednesday. And so you go to scan, and that's how you set your screen up, folks. Like you screen, like if you want me to run through a scanner video, write to me, I'll do it for you. I don't mind doing it. But the person who wrote to me said, Tim, how do you get that scanner to pop out? Because I'm just hitting the enter button and stocks are rolling through. That's what she wants. And I said, I'll show you during the podcast. So when you come here, the scanner will be right here in the watch list. I've got the scanner loaded up. You can choose any of your scanners, right? Like here's all scanners that I've had pre-programmed, that I've pre-programmed. And then you just say detach the gadget, like Inspector Gadget. You just detach it, right? And so just detach the gadget. Let me pull the gadget back up. And now I'm going to choose the color. And then you can see that I've got 9 and 9 synced up. And so I'm going to hit AMRS. And you can see my screen magically changes. And so that's how you do it. That's all. Nothing to it. Lickety split. Rewind the video if you didn't catch it. If you have any questions about how to set it up, tim@revereasset.com is how you do it. So with that said, got a lot to cover. Go ahead.
A
Please.
quick question, because I know that stock nerds are thinking about this question. So when you pop out that window
Mhm.
and it's got the different rows of
Yeah.
the different stocks it's screening for, right?
Mhm.
when you in the background you've got the chart of what is that? I can't.
Oh, I just changed it back to the NASDAQ.
Okay, good. Okay, yeah. But when you click on one of those rows, one of those securities, does it automatically change that chart?
Yeah. Yeah.
I know. I just wanted.
Oh, yeah.
I knew that. I knew I was wanting to clarify for the listener.
For the folks at home. Yeah.
Yes, for the folks at home. Yeah. That's why
creating a word picture.
That's why we play the game for the folks at home. So we're gonna get the pound, get to TNX, DXY, geopolitical events here in a moment. But Hunter, I heard we'll get to annuities too, Dan. We'll do that in a moment.
Do what?
Annuities.
Oh,
in a moment. In a moment or two. Hunter, are you with me?
Lifetime income.
Yeah, I'm with you.
Hey, so a couple things, Hunter. Hunter is our official gambling expert, right? By the way, what's the cup that you and Alex are playing for? The Don Cup. Don's Cup.
Can we just
call it Don's Cup?
No. It's called the Stanley Cup, which the irony is the founder's last name was Stanley, and of course it has nothing to do with hockey.
Oh, okay. So Don's Cup is
I like Don's
Cup. Yeah, I do too.
You have Hunter's address, right? Because it's probably get that thing ready to be.
Yeah, right.
So Alex and Hunter are playing fantasy football, I guess, against Don and the rest of the league that Don belongs to. And they're
I don't have to. I could sit back. I'm gonna hang out and let Hunter. Hunter's the wizard with that stuff. So
they're battling battling for Don's Cup. But you can see here, I've got this.
Get a gold plated.
Don's gold plated cup.
Yeah.
Yeah. Well, we'll send Zach working on that imagery right now. So I don't know if you can see this. It says big sports betting kickoff. So I was wondering, Hunter, if I haven't noticed it, and I purposely didn't go find this answer. Do DKNG Penn? They're fairly new. And I don't know if they've been around long enough to understand seasonality of those stocks. DKNG's had a big move this week. That came off, I believe. DraftKings. I believe that came off of some Arizona news. But I wanted to get Hunter's take on, let's look at Penn. Let's put up Penn. Let's put up DKNG. The score doesn't exist anymore because it's going to be a part of Penn. What do you think, Hunter? Do these stocks, is it as easy as like, oh my gosh, football season is about to start on September 6th or September 9th? Is it as simple as this is the time to buy these stocks?
It's a little bit more difficult than that because, you could say the same thing about Amazon going into Christmas time, et cetera, for that type of thing. And I know there's been commentary regarding that recently, just because DraftKings and Penn obviously were on really nice runs going into the last football season. However, I think it's also important to keep in mind that your sample size is extremely small. And these stocks really only got hot last year, but that was also coming off the pandemic lows. So it wasn't just like it was only Penn and DraftKings that were high. There was many stocks that were doing very well from May, June, all the way into the beginning of September last year. So I wouldn't put too much weight into the fact that they're rallying before football season. I mean, maybe you can. There's certainly, I think it's also partly tied to the vaccine. With Pfizer and the FDA and whatnot, maybe that's a good sign to ensure that sports will be played. That could be a role in it. But I think the only thing I'm really paying attention to is there's certainly some volume on DraftKings, volume on Penn recently, breaking some downtrend lines, pushing through some moving averages. So there's some buying demand. I wouldn't say it's strictly due to seasonality, but I'd say you got to pay attention to the volume and the price, and it's certainly making a big move on both of those names.
Now I've got another thing for you. So, Alex can join in here too if he wants or has some thoughts on it. Of course,
full disclosure, we're long DraftKings.
Yeah, I should have said that. I apologize, not saying it up front.
And Tim, real quick, can you tell if DraftKings is another inside day today so far? I think it is.
Yeah, for the most. Yeah, just get it right here. So it's that's right there. What you got, folks? Even though it's at the third ATR, what you have is this nice little pennant forming. And so break up or break down.
Flag, yep.
Yeah, a little flag. Interesting conversation, Danny, that I wasn't a part of. So let me just get this off the screen real quick because I want to watch this and to see. Look, the move up today, like the markets have been amazing. I'll tell you about this conversation, Dana. But the move up today hasn't been on any ticks. I explained the ticks in the video a couple weeks ago, and we talked about it in the show maybe a couple weeks ago. highest tick today has been only plus 800. And so I'm curious if, as the day wears on, if the markets just levitate back to earth. Because Jay Powell said all the right things this morning in his, they call it the Jackson Hole speech, but really it's just another Zoom. And Jay Powell said all the right things that he wanted to say. And because Jay Powell is up for not re-election, but will you pick me, Joe Biden? Joe Biden nominates the Fed chair and the vice chair. And Jay Powell is up for renomination. And Jay Powell, you can't say Jay Powell's name without saying Jay Powell. Right? It's not just Jay. No one knows Jay is, but Jay Powell. Jay Powell will not say anything to rock the economic boat. So, but it's interesting because, you know, you combine this big Jackson Hole speech, and we're going to taper and whatever, with geopolitical events that are going on. And a lot of people are caught alongside of the markets. And it really just goes to that there can be news going on, and how you feel emotionally about that news, and how you feel emotionally about that news doesn't translate to markets. Okay, and so I think that's a point that when you say it and someone digests what I just said, they're like, well, no kidding. But there's a ton of people out there that bet on the wrong side of the markets, meaning bearish today, because further escalation of geopolitical events. Then you add in Jay Powell, and you can build yourself into a scenario that you can't get out of. And it really reminds me of the worst investing product ever created, which is UVXY. It's a VIX product. And the markets have had, I would say, the markets, when they drift down to the 20, they don't just like drift down to the 21 like it's a graceful fall with a parachute. They've just, you wake up, boom, 30 points down, 40 points down, and you're down to the 21. Are we going to do the dance where we dance around 21, 34, and move back higher? But look at this UVXY product, which is a very popular product, and it's based on the VIX, and it's horrible. It's a widowmaker down. Like if you,
what's it down to in price?
It's down. Well, they keep readjusting it. Don,
I was going to say they're going to do a reverse stock split.
I don't know how many reverse stock splits, but Don and I have watched these reverse stock splits happen. Like UVXY gets down into single digits, and then they've got to reconnoiter it, and it's the worst product. So if you think that markets are going to fall to hell in a handbasket, I implore you to wait for a signal. Have you broken the 21? Or like you could say, are you at a third ATR, which isn't on the indices, and it's not necessarily the best signal. Put call, like a low put call, even that's not a good signal. Like you need price to break, right? And you need price to break
on high volume.
Yeah. Well, you just need price to break more than for 24 hours.
Well, yeah.
In this market environment, and throwing your money into a VIX product, betting on more volatility, like, could there be any more geopolitical volatility going on right now? I mean, of course it can ramp up, but it's there. And you need to be able to look at these products and understand what they're telling you. Like, this is a horrible product. I can't say enough bad things without swear words about this. I'm trying to talk you out of this. People, and Danny is acutely aware, there are people that will destroy their lives a little strong.
I've known a few people that blown up their portfolio going too big in position size and betting too much.
Yes, because their worldview is different and it's not matching. And we're on a daily chart here. Is not matching. We just hit a brand new high in S&Ps. And so, the S&Ps can pull back, but are they selling off, right? And doesn't mean it won't happen. I mean, there's going to be sometime there's going to be a sell-off, right? But using UVXY to do it, I think, is often a mistake. If you want to hedge, if you're saying unhedged, well, maybe cash is a better hedge. Like if you're unsure, like this product. I don't even have typed in it. Oh, did we just lose the internet? Hold on. Or did I lock it up? Oh, I locked it up. See, it's the worst product ever. And
even ThinkorSwim doesn't like it.
Yeah, ThinkorSwim is revolting. So, like, that's funny. It's just awful, and it reminds me of what's the company like a couple of years ago, Don, that had a VIX product that blew up? It's Swiss
Credit Suisse.
Credit
It was
Suisse.
T-Vix,
credit. Yeah.
was it,
Yep.
or-
What was it?
I think it was T-Vix. if I'm not
TVIX. Yeah,
mistaken.
I think it was TVIX.
Yeah.
They had to shut it down.
Yeah, they literally, and people just they lost oodles of money. And so, look, I'm not saying that's going to happen to UVXY. What I'm saying is, there if you want to know some better ways to hedge your portfolio because you're a little bit longer term, you're not shorter term in nature. There's better ways to do it than UVXY. You can Don at Revere Asset, Dan at Revere Asset, talk to Hunter, or talk to anybody but UVXY. Do not email UVXY to do it because this is the perfect example of there's a lot of instability somewhere in the world, and it ain't showing up here. And a lot of people had their worldviews.
Well, it doesn't match what the market's doing.
Yeah.
Remember, there's an old adage on Wall Street: the market climbs a wall of worry. So sometimes it will, sometimes it won't. That's why you got to follow what
There
the
you go.
market is doing, not what you think it should.
Yeah,
be.
and that's where the news leads you astray. And so
Peter Lynch said more money is lost worrying about the next correction than during the correction itself.
yeah, and so knowing when to step aside is crucial in this. You know, you
But
need-
knowing not when to step aside is also important.
Yeah, and I almost made fun of that statement, but that because it sounds so, and I don't mean to rude, like it just sounds so like, well, of course, Danny, not knowing what to say, like, of course that's important, but what do you read? Like, what do you do to get you in there? And if you watch, like we all talk about it on the videos, 5 nights a week you get a video, six night on the 6th night, and on the 7th day they created the Your Money podcast. On the 6th day you get this video podcast. We create content 6 days a week. And in that content are trigger events. They're not like, oh yeah, it's back to school season. We should buy cold. It's not that. It's okay, so we have a fundamental, like there's a fundamental basis of how you're picking these stocks or these, or some kind of theme on an ETF. Now, what's the trigger event? And for me, it's typically going to be a moving average, like an 8 exponential or a 5 exponential coming across the 21. I'm waiting for mutual funds, pension funds, hedge funds, the people that make a difference in the world. I'm waiting for them to clear the path for me like a snowplow in winter. And that's evidence to me, like it's evident to me when you see the shorter moving average crossing through to the upside to the longer
You
moving
want to
average.
see momentum.
That's what I'm describing. But people aren't waiting for trigger events. They're betting. And this is why I think investing or trading is so much better than sports gambling. And someone might disagree, right? So I am not the sports gambling expert, right? Spreads, over unders, whatever. That's why I defer to Hunter. That's why I talk to Hunter about this stuff. I'm interested in it. It's not my forte. What's the trigger event? Like what's the trigger event to know to go long the Chicago Bears? One, it's putting Nick Foles in at quarterback. Let's just say that.
Don't bite, Hunter. Don't bite.
I'm not. I have Justin Fields comments ready to fire, but I'm not going to let them out.
So you need a trigger event. And like in my life, do I place bets? Hell yeah. I love sports cards. And I love finding
You love opening sports cards?
oh my God. Those are lottery tickets. But I do buy a bunch of packs. I do buy a bunch of things off eBay where it's just like Bryson Stott is like one of the top prospects in the Phillies organization that got promoted to Reading like right before I took the kids to a game. And oh yeah, the moment I saw, I'm like, oh wow, that dude's good. I'm literally in the stands buying like all the rookie cards, right, and stuff. But
Have
that
you wallpapered the room yet with all those cards? That's what I want to know.
what's that? Oh, what I'm
Have
doing?
you
Yeah.
wallpapered your room yet with all those cards?
No, but there's a lot to do. Like people are doing some interesting things, like the commons is what they call them. Like they're creating. I'm not an artist, but they're creating art out of them,
Collage, yeah.
and like they're selling them for big bucks. Like it's pretty interesting. Like if you scan eBay, you'll find a bunch of artist listings and stuff. But anyway, like I place bets like that, I view crypto as that. Crypto's incredibly hard to trade. Like you can get the same triggers, momentum triggers, but then you wake up
But it's
overnight.
faster.
Yeah, and then you wake up overnight and Korea dumped, or like an Asian country dumped, and it's like, okay, your triggers, you got the triggers, but you were asleep. Like I'm a buy and holder with crypto. Ironically enough, though, fueled by I sell sports cards sometimes on eBay, not too often lately. All that money is how I built up my crypto. So 10xing that purchase as we speak. Anyway.
What are you doing with the 2.6 metric tons of cards that are not really worth anything?
Well, that's
we haven't talked.
That's
About
the wallpaper I was asking about.
That's the art part. Like I would love for someone to turn it into some cool art. Like I've been looking at what people do with the common cards and the things they create. And it's pretty, like, they'll take all the common cards of, like, basketball is one that I saw recently. Like all these random basketball cards, but then they turn them into a collage and it looks like Michael Jordan or it looks like Kobe
Yeah,
Bryant.
I've seen stuff like that.
Yeah, and it's like, that's pretty cool. And I'm like, wow, and none of those cards are Michael Jordan or Kobe Bryant. Right. They're just some pretty cool stuff. And so anyway, let's do this, Daniel. I've got, I started to go into it, but I stopped myself. I was privy to a conversation yesterday that I was, not that I wasn't not supposed to hear. It wasn't my conversation, but it wasn't my conversation to hear. And I want to be careful because I don't want to out the company and I don't want to out how I heard it. But it was over a Zoom, right? Okay, so it was over a Zoom. And some really interesting things were being said about this company's stock, okay? And they caught my attention because none of it syncs with the way I think. Mm-hmm. And so now Hunter and Alex, or Don, normally, like right away, my first thought was, I got to call Hunter and run this idea by him. Because that's what I did when I had, hey, we should buy every IP. Like, it started out, the conversation, stock nerds, market lovers. If you want to find it, like, just go to revereasset.com and you'll see in the podcast page, there's literally going to be a show that's like, what if we bought every IPO? That conversation.
There's Don's cup, by the way.
That's true.
Go ahead.
I tried to let that sit. I don't know how he gets it down there. That's the problem. Like, it's so big.
Oh, God, don't set him up.
That's what she said.
You had to set him up, didn't you, Tim?
Come on, man. The neurons are firing, dude.
But
I got some coffee in me.
That was Pete the cat? Or who's that?
Yeah. Yes, Don's cup is named Pete the cat.
Party the dinosaur? So anyway, go ahead.
Bluey.
Jesus,
I just made myself stupid with that joke. So what happened was a couple months ago, I wanted to figure out how, like, how to buy, like, we should, like, I think of SPACs like startups, and people don't have access to the startup market often because for a number of reasons. It's isolated, you need deal flow, you need to know who to buy, like what startups. And I like SPACs, and I like SPACs because it democratizes the whole space. Led me to a call with Hunter about SPACs, and then Hunter said something, and then the next thought in my head was, after Hunter said something, was, what if we just bought every IPO? We should just probably do that. And then that led to research, and then that led to the community of our listeners is really awesome. Stock nerds and market lovers, where we talk about an idea, and then they just run it. Like, they do a ton of research. And I keep in touch with a number of them through my Twitter page. There's a group in the back channels of DMs where we're just talking stocks, like, often all day. And they're doing the research, and they ran with the IPO research, and they're trading it really successfully. And I call them the IPO Club now. And by the way, stock nerds, you can join. Just email me or find me on Twitter at TJ Reazor if you want to access to these people. It's just a bunch of dudes getting together, and I just meant in general. There is a couple. Gender has no place in this discussion. Anyways, a bunch of people get talking stocks. I'm trying to get out of this. Something that I created, which I didn't mean to. I will eventually get out of this. Yes, you can watch the struggle. Now I'm getting.
Look what society has done to you. You dudes, and all of a sudden,
I know
you have to recoil.
Oh my gosh, you're 1,000% right there. Some innocuous comment in my mind made me go, oh, let me just backtrack. So Don's right. Don's 1,000% right. So
Say that again.
so I wanted to call Hunter, but I literally had the phone in my hand. I gotta call Hunter and tell him this. Don't do it. Let me tell him on the air. So Hunter, I'm in this conversation where I'm not even in it. I'm just listening intently, and where the person was talking about their company's earnings had just been released, and he's jazzed. Like this dude was foaming at the mouth, excited because it was a good report. After hour, the stock was up 10%. Now it's only up 1% right now during real market, during the market time. But like this person is not in the stock market. This person is a department head for a division at this company. And he says the phrase. This is what caught my attention to get me to the conversation. Well, you guys know how he's talking to his team. If I haven't set this story up properly, he's talking to his team, getting them excited about the EBITDA of the company. Like literally, that's what we gotta talk about the EBITDA. Said nobody ever. Like nobody ever in the history of excitable conversations has walked up to Zach. Zach, when's the last time one said, "Hey man, we gotta talk about that EBITDA"?
Never once in my life.
There you go.
Never.
And so earnings before tax, amortization. And so he's jazzed. He's like, and you guys know how the market works. Now I've listened to 33 seconds of this guy talk, and I know he has no idea how the market works, but he's jazzed, and I'm happy for him because he's finding success because he clearly has all his money in company stock. Enron. Anybody remembers what happened to those? Really, they got taken. They got they believed. Anyway, so before I go down a road, this company is on solid footing. It's not Enron. Let me just say that. Look what society has done to me, Don. I'm backtracking again. And so, did Don just give me the? I can't see the fellow's stuff. So did Don just give me the? Did he just? Yeah.
I did.
So he then says, and the Bank of America just took our stock price up. That was the quote. And you know what happens when the analysts get a hold of your stock and they start covering you and they raise estimates. And then I almost spit my drink out. Because we have had many a conversation, Daniel, about how oftentimes there's a reason why they call them in the betting world touts, right? They're touting. Touting is an interesting word. But when people go on TV, media, whatever your source is, and tout, are they trying to hand off today's garbage to you so they can get out? Like oftentimes, that
or support the stock.
Yeah, or downgrades. The downgrade game is, and I always think it's nefarious with Goldman Sachs, where like a stock has run a gazillion percent. It's lower left, upper right, and Goldman downgrades it. Like a Joe, who does the quotes he was the New York Yankees catcher, not Joe Garagiola, but like the guy who will say that restaurant.
Girardi?
No, not Joe Girardi, the manager of the Phillies. God, can we get some?
That's the manager. Yeah, you're right.
Yeah, as manager. Like who is the Yogi Berra? Yogi Berra, like that restaurant won't make it; it's too busy. Like he, like Goldman Sachs comes out like something is run from 0 to a gazillion. You know what? That stock's way too successful. We're downgrading it, and really, it's because their people missed it.
It's a broker high five.
Yeah, man, the broker high five. We labeled that years ago, the broker high five. But he says, and again, to remind you, he says Bank of America is now covering the stock, and they've raised our price target. I don't want to give the number because I don't want people to figure out what company I'm talking about. Which then got me thinking, wait a minute. I'm over here chastising this guy in my brain. He might be on to something. Pick up the phone, almost dial Hunter. Hunter, what I'm going to do in your time between petting your cats. He's got cats. Can we find a way to capture, and I got to think of the system to do this. That's why I didn't do it yesterday. Like all the upgrades being given. I don't want to know the downgrades. Well, maybe eventually we'll expand it. And this is where the stock nerds come in. Stock nerds and market lovers. Feel free to join in this research. Is it as simple as just buying all the stocks that get upgraded?
No.
I know. Look, I know what you're saying. I know. Before we say no, do the stocks. So, God, I got to make up a number. This guy said the stock was going like Bank of America, which is the legit bank that upgraded the stock, is going to 100. And the stock is not at 100. Do stocks, because his next phrase was, and stocks grow into their upgrades because that's where the banks want them to go. And I'm thinking, well, hold on, stock nerds and market lovers. That might be a research project.
Does it have a self-fulfilling prophecy?
That's what I'm getting at.
No, I got follow you.
And I'm thinking, if we can nail down the self-fulfiller, this ETF would be called prophecy. Figure out the ticker symbol, someone. Open sourcing it to the fans right now. With this ETF prophecy, what's the window, right? Because you get the pop on the upgrade typically, unless the market's good. But what's the timeline for the stock to grow into it? So I'm thinking off the top of my head, I need to know stocks that like going back through January, and I've got a couple programming I need to pick. And I just want to isolate it by, I don't know if I need to isolate it by bank issuer or ticker, probably ticker. Find when the upgrades were given and how long, if at all, ever, the stock took to grow into the target. That's interesting, right?
I've got a couple of I guess different variations that could possibly prove interesting from a study point.
Let's do that.
For one, you would want to possibly track the stocks that have had the biggest increase in analysts covering them and analysts giving them buy ratings, right? So if there's a stock that had, in January of this year, had one analyst covering it with the buy, and now it has 9 analysts covering it all with the buy, that's something you want to pay attention to. Kind of in the same way, maybe like you would pay attention to institutional fund ownership constantly increasing by a large amount. So that's one way. And then secondly, looking at what a stock does after an upgrade, could you possibly craft a strategy to play, the pullback? Because oftentimes the bounce from an upgrade usually only lasts a few days, and oftentimes the gap is filled. And you could look at how many times does the stock end up filling the gap and coming back after that initial bounce from the news.
I'd like to jump in.
No, one second. I want to tell him that's a great. Can I compliment him?
No, I agree. But here's one thing. Here's one thing you got to figure out and be careful of is that spurious correlation. Because here's the thing: double-digit, increases in earning growth and revenue growth and company acceleration in cash flow and growth will cause that analyst to go from 1 to 9.
Right.
Will cause those analysts to upgrade. And so, are you really finding the thing that's the catalyst to cause that, or is that the after effect?
Pause.
After effect.
Well, I think
one second. One second, because I think I want to just make sure stockers understood what Danny said. He's saying the normal mother's milk of growth stocks, earnings and sales, like are those the things that are really causing the move higher? And now you just got some people saying, "Yeah, you should go."
They're starting to notice and jumping on board. Yeah.
Let's take this example because it'll be like
because you want to get in early as possible.
Piton. Here's Piton, which is having not the best day. The expected move it's back to the expected move. Expected move from Thursday to Friday was 10, and right now it's at the expected move down almost 9%. So, but it was down more earlier. This is an hourly chart. So now, what Danny said is good earnings, good sales. Okay, not that Piton had bad earnings, bad sales. It's how the market's interpreting that information. And so now. Right. And so now I want to see if XYZ Bank comes out and says, oh, no, we've gone through the Piton numbers and we've upgraded it to a buy targets 150. Because it's not going up today.
That happened today.
Oh, my gosh. And we don't plan the show, folks. And this is why we don't plan the show, because the authenticity of our conversation is so much more than anything you'll get on some pre-planned dumpster fire of a podcast or CNBC show.
The bank said we love their move to the subscription model. Lowering the price will make more people buy it. Eventually, they'll sell the equipment for virtually nothing and make all their money off the subscriptions.
I do think there could be some merit to that, just for the record.
There is, but not in the price action today.
Not in the price action
Can
today.
Can I make a point? Can I make
Please.
a point?
Yeah, man, it's your show too.
Yeah. So the other thing we have to remember too, some of these analysts they don't have skin in the game. They don't own any of the stock, so
they never own stock.
Well, yeah, a lot of times they're trying to support it because their investment bank is underwriting the stock. The company's the client,
there's
not
a lot
you
of
as the investor.
Goldman Sachs in some of the more tenuous days of Tesla was very yes.
Hey, Tim, I've got something that I think is really interesting here, just to kind of go on to this conversation of these banks and analysts possibly manipulating stock prices with downgrades and upgrades, et cetera. So this is from not very long ago. Micron Technology. If you want to pull up this chart,
what is Micron? MU.
Yeah, we're gonna look really at like 813.
Oh, let me get some.
You see that big sell-off, right?
Oh yeah, okay, I can.
So
yeah.
So Morgan Stanley on 812 downgrades Micron and lowers the price target to 75. Subsequently, obviously the price continues to fall from 812, which I think was going to be right in there. So we go down from like 82 to 68, right?
Right. Yeah.
At 9:30 a.m. on 813, a dark pool block of $7 million bought at $70.64. 15 minutes later, a little over $1 million of calls were bought. So literally right after the night after the upgrade or the downgrade, the very next morning, right at the market open, massive money coming in to buy. So, I mean, I'm not saying, it's purely speculation, who knows who was actually buying. But I mean, everybody who's, pays attention to the markets, stuff like this happens often with these downgrades and these analysts and these investment banks.
And that's institutional money. That's not.
So are the so hold on now. Hunter raises a point. I don't know if this is the point he was trying to make. Is the real signal not the upgrades, buy the downgrades? As long as the stock's not luck and coffee, which will always be
as it's got earnings growth.
Luck and coffee will always be my poster book best sell I've ever made. But I wonder if the signal is the downgrades. And then
maybe the way to say it would be downgrades after a stock has had a big run, not just a downgrade on a loser, but something that's had a big run. Maybe pay attention to that. I don't know.
Well, what's the timing mechanism? Like right off the top of my head, the beat, what beat do you wait to step into it? Would be maybe 24 hours. I mean, of course, Don would probably say, "We'll just watch the chart," but
of course,
boy, that's interesting because if you could automate a strategy around that, downgrades come you got the downgrades coming in. And then, that's your watch list. And then you're just watching on smaller time frame charts. Let's get this to an hourly chart. Now I'm genuinely best part about the show, Danny. We don't have producers telling us exactly what to say. So here's what Hunter's talking about. You get this. What kind of candle is this? Like I almost said hammer candle, but I don't know formation. You get this big wick here. Well, it's big for an hourly chart. And that marks the low. But you don't know that's the low. So imagine you can't see any of this. You need to you take it to a 30-minute, an hourly. I don't know. But 70, let's call it 70 to 73, 74. That's still good money where I come from.
Well, the person who bought $1 million worth of calls at 70 is already seeing a decent little profit from that. They may have already sold into this huge move up into the 50 right here, where you see that big candle. But let me get it's interestingly enough, Micron is, now that we're looking at the chart, this one has really gone to crap, for lack of a better term, compared to a lot of the other semiconductor stocks.
I had
even some of the laggards.
I had something pop up on my weekly scan on Wednesday. What is today? Friday? So go back 2 days. It was right in here. Is that Wednesday? 8:25 is Wednesday. So you got the trigger event, 149 to 158, 10 points in a couple of days.
That's microchip.
Yeah, microchip.
Look at pull up TSM and AVGO. They look very identical to microchip, just starting to kind of hook back up
Yeah,
a
like
little
that.
bit, trying to get back above those moving averages.
And I was doing that on I did a MCHP. I did a weekly scan because I like the weekly charts. Like the daily charts, they're just there's a lot of noise. Like it's a longer wait. Like that's why like if someone said, Tim, what are you waiting for? I can't wait for the markets to fall back to their weekly means. Like I want that to happen because those are to me.
May do it 15% higher.
Yeah. Oh, 1,000%. So I'm scanning for individual names or ETFs that have, either fallen back to their weekly means or undercut, and now I've got a trigger event. Like I think I did a 5 with it coming through the 21 on a weekly time frame. I got a weekly chart. Let me get that up there. So here's MCHP, and it wasn't this
Tim,
high.
you're an enigma wrapped in a riddle.
Why?
10 minutes ago, you quoted the ticks, which is the absolute ultra shortest term indicator you can get, and then you pivot to weekly charts. That's
this is a great point. No, this is a really good point Don's brought up. I want to know what's going on today, right? Because that's gonna. Okay, I'm about to say something dumb. So if I know what's going on today, I can figure out what's going to happen tomorrow, most likely. I'll take you. Don's right. I get the. I'm in hourly 30-minute charts. I'm looking at the ticks because I want to know what's happening today. I want to know the intercorrelated assets that can drive markets action today. Because if I understand that, I can explain what's happening, to me and then to other people. My preference in life is to get moves back to the weekly mean and buy the hell out. Because I've gone back through time to understand that the weekly mean is a very strong place to buy. Like gosh, I got to find the charts.
Well, it also would depend on.
Hey, Tim, I have a question about ticks. If you could show me. I was thinking about this. If the ticks intraday, if you're an active trader, this may help you. If they go plus 1,000 or plus or minus 1,000, is that a way to, in the intraday, to maybe potentially catch a bottom or a top?
Sure, let me show you that. So I'll maximize the sell. And so let me this is to Don's point here, a 1 minute chart. If you see it's literally a 1 minute chart. So I get it. Here's Friday. And so so you'll see stock nerds. I've got plus 1,000 and minus 1,000. Real buying or selling is 800 to 1,000. Okay, so and look, different platforms do it a little bit differently. I know TradeStation is literally off the New York Stock Exchange. ThinkorSwim is an amalgamation of three different exchanges. And so, but even though it says NYSE tick up there, so everything between the hedges of 600 and 600 is just noise. It doesn't. If you've got a downtrend going, typically like if the market's been selling off all day, and you spike up to like plus 800, especially in the last hour, that'll typically stop that downtrend. And you can use this information in a number of ways. So, do you want to short when the market hits minus 1,000? Is that the time to short?
No, I'm saying buy at minus 1,000.
Oh yeah, I'm going to get there. I was setting it up. I know what you're saying.
Okay.
Do you want to short at minus 1,000? Not if the market started off that way. Like if the market to open up started off at minus 1,000, that's typically the market shooting all its bullets at the open, and you'll see some gravitation. That gravitation only might last 15 minutes to an hour, half hour. But if you're in the markets hot and heavy watching it like that, understand what you're looking at. It's counterintuitive. Just like if the markets open up at plus 1,000, they give it 15 minutes and you'll see a little especially in the SPOOs. I said SPOOs, Danny. That now I sound like a dude. Yeah, S&Ps. You'll see it pull back a little bit. And so to answer Alex's question, yeah, you could take that as a buy signal, but how long it lasts? So I've got on this chart, this is a 5-period moving average. And when the green line here, I'm tracing it for you, which is now going to be a red line. If the 5-period moving average cannot get above 0, so that's a moving average, so it's slower than tick or price. If that period moving average can't get above 0, that is an indication of selling still.
Still weak, yeah.
Still weak. And you want to be careful. Like, it doesn't mean the market's going to sell off. It's not going to fall in the handbasket. It doesn't, but it doesn't mean it's going to rally. And if that moving average can't cross that 0 line, that's a problem. When you see ticks shoot up plus 600 and right back to minus 700, right back to minus 800, that, like, the market did that yesterday. Like, there was this big move here. Let me see if I can get it on the screen. There was a big move higher, and the market's couldn't sustain it. So here you had at 14.15 this plus 800 tick, and then like right away you by 2:30 like you couldn't get it. But look at what the moving average was doing. It's going up above. Here is the 0 line is somewhere right in here. Got up above 0 and it couldn't sustain it, and so you use this small information to help your timing. Like, just because I like the weekly charts, you're still making entries today. And there's better ways to make entries. Entries are to me, are on smaller time frames. Get me into the park of the weekly mean, because the weekly mean is powerful. Like, look at this. Here's 2016. Like, just look at this chart. This is a weekly chart of the S&Ps, and I know it's not that big. You can go back even further. We don't know. Here's 2015, right, off your screen, or at the end of 2014. You're hugging the mean. You're hugging the mean. You don't spend. Look at how little time on a weekly basis you spend below the weekly mean. It's not that long, even during a pandemic. Before somebody comes to me and says,
because the sell-off is very swift and deep, so it happens very quickly
right,
in a few months.
And to the people that want to spend time, well, Jay Powell stepped in, unprecedented actions. History tells me we don't spend that time. We don't spend that much time below the weekly mean. We can dissect the reasons why over coffee later. And if you can see it the way I see it, which doesn't make it right, by the way, then I want to I won't say purposely, but I want to buy aggressively weekly means. Now, what about individual stocks? Can they spend a lot of time below their weekly means? Hell yeah. But if you can then, so the process where Don likes it, William O'Neill and IBD, and that's where I cut my teeth on everything from Bill. If you infuse your process with about 70% fundamentals, the things that give stocks the impetus to go higher, earnings, sales, institutional support. Typically, there's no absolutes. Typically, you infuse your process with that, and you understand the power of the weekly. There's pretty much nothing you can't do in markets, but you have to have a process, and you have to have a discipline, and that's how you can find long-term success in this. So, look, I look at this. We've come back to the weekly mean in 20. Here's 2020, right? Or at the end of 2020. So we're 21 once this year. It's about a 35% move. It's about a 30 from that one time this year. The S&Ps have gone up. Here, let's just do it. I don't need, because I could be misremembering. Here, I'll just do a little shanty way to do this. Excuse me. It's 20%. 20%. And look, yeah, Don's
from the bottom of the
from the weekly mean to where we are. That's 20% of the S&P. So you can make a lot more in individual stocks. I get it. But even if you were just somebody who bought the weekly means on individual stocks, but you have a process to harvest profits, right? Because let's pretend, even if you're like, well, Tim, I don't have a process to harvest profits. I'm just going to come in here and I'm going to buy the weekly mean. And you can see that moving average line is going left to right, lower left to upper right, pardon me. But what if it came down to just, I don't sell till it hits the week, if it starts closing below the weekly. That's still a 15% gain for just understanding one moving average and one time frame. Now imagine if you could do that for individual stocks.
You got to be real patient though, because you may be waiting for a while.
That's
the
whole
problem.
point. Yeah.
But I'd like to mention on the ticks, it's very, very short term, Alex. So if you see negative 1,000 tick, and you see them keep coming and printing, that means the market's getting pounded. You need to stay very defensive, either possibly raise some cash, but don't buy anything. All of a sudden, when you see that reversing, and all of a sudden the negative ticks are going away, if you've already got something identified that you want to buy, that's the time that you would do the entry.
But there's also a little bit more to that.
Yeah,
too.
and that's what I was getting to. I feel like the environment you're in, if you're in a strong secular bull market and we're in a strong trend like we are now, that could be something, a process you could add to your intraday type trading.
Yeah.
It's still very hard though, because it's very, very short term. It's
but if you
literally
saw,
minutes.
But I think it's not one piece of information in isolation, right? So if you see negative ticks, just a negative environment throughout the day, and then you couple that with, the S&Ps are pulling or are maybe pulling through their 21. Right. Well, yeah, it's probably a sign that you want to be a little cautious in that environment. And so timing your entries to me is still on a daily basis. It's just what's the big thing I'm looking for? Like, the weekly mean, like nobody wants to buy, like, buying, like right here on 3-2 last year, you would have turned out great today, but you also had a big way to fall. So even though I've got this kind of bigger picture that I talked about with weekly charts, there's still time on the daily. Hopefully that clears that, but that's a really good point.
Thank you.
Well, it's a good question about ticks. Great point, Don raised. Real quick, I want to talk on this. We'll get to annuities maybe next week. I don't know.
All right, well, let's get to the markets.
Yeah, we're going to get to the markets right now, but I do think Alex Hunter sent something over that's super interesting yesterday. This about Tesla. And I'm not going to get too deep into it, but Tesla files to become an electricity provider in Texas. And I think that electricity is the new oil. And so imagine those movie trailers, in a world where 50% of your auto production is mandated to be electric. Right now, the mandate is that globally, like, you got to make electric cars. Okay, so like, let's pretend that law stays into effect. Doesn't matter if you agree with it at home or not. It's the law, right? And so I believe, and I covered it in this episode with Don. Don's on the picture. It's episode 362, August 13th. And you just run through some of these power companies, these power providers. I believe electric companies are going to outperform. Doesn't mean it's going to happen. But I talk about in depth the Kodak moment. I believe that convenience stations, which aren't necessarily the energy providers, convenience stations are having a Kodak moment right now, because they're going to meet the demand of what's on the road right now, which is gasoline engines, diesel engines. But they're giving way because of that, because of the expense of putting in charging stations. They're giving way to people putting these charging stations at home. And the people that are going to sell you those charging stations will be electric companies. And I think Elon Musk is on the cusp of this. I think he's really smart to become a provider, like a one-stop solution. I think he's super smart to do this. And I was having to talk with Zach before the show started, and the fellas joined. I think that the convenience chain that caters to where the market's headed, okay, it'll be slow, and talk about patience. Right now, you can't. It takes 5-10 minutes to fill up a car with gasoline. Can you get that to 20 minutes, 15 to 20 minutes? Like, can you get half a tank electrically at a pump at a convenience station, convenience store, whether it's Wawa, Sheetz, QT, Quick Trip, or Racetrack, don't matter. And then give them an experience, get them out of the car, and give them an experience in store. So the store of the future, in my opinion, isn't when you walk into the convenience store and you see 1,000 different convenience items, and they're all maybe a little bit overpriced, and they all center around beef jerky and Celsius energy drinks. How is it? You know what? How
a
is
good place.
Yeah. Oh, don't take a left turn. Let's
sorry.
keep going. Let's keep going.
I think the store of the future is going to be. It's not Kroger and it's not a supermarket, but it's a tweener. It's in between what you see right now with a convenience store and a smaller format grocery store that has grocery store prices, but also has one branded diaper, maybe some formula, milk that's not highway robbery, along with some convenience items, and you're giving them a reason to come into the store, not like not like a Walgreens.
You know what this sounds like.
You also
go ahead, Honor.
I was just going to say you may end up seeing at gas stations and convenience stores if you end up having to charge your electric vehicle for 30 minutes every time you go or whatever. Yeah. Like more lounge type areas, entertainment, coffee, a little place where you can sit and have your coffee.
Again, they need the turnover because people are only going to buy a certain amount of stuff. And so you have to have the turnover. Where I see the key is the fact that they need to improve the technology so the charging becomes faster. So you can charge in 10 minutes or 15. That way you still have enough people coming
the sweet
through the
spot
door.
For me would be 15 to 20 minutes. And that's just me. But take Hunter's point here. Now, what if you're in a state that has legalized gambling? You go into the DraftKings sports book, and they got 16 different games on, and you go in and place your bet. Now you're entertained. I think Hunter's spot on here, and I think that's where the world's heading. If I think Elon's spot on here, he's not going to let that happen. He's going to get the chargers in your home. They'll have universal adapters, and he's going to sell the electricity. He's going to do it better than here in Texas, which is a convoluted, very bad system, as we all found out last winter. Yeah. So real quick, Hunter, I normally go to you. I'll tell you what, we won't mess up the order here. Let's go to Hunter. Alex is going to do some follow-up on some stocks and what he's thinking about, and then we'll get to Don. And then next week, Danny, we'll touch on annuities. Yeah, we can touch on all that stuff. But I thought this was a good conversation today. Really, let's look at the markets real quick before the fellows start. Let's see what the markets are, in fact, doing here. And so, just gravitating at day highs. Look at that small caps, man. Small caps having themselves.
Mm-hmm.
So
I got two alerts on IWM through 224 and 225. I've talked about those in the videos a few times. Those are pretty important levels to get through. That equates to getting through the recent highs from the last 3 days, getting above 224, and then 225.21 was the high from 806. So clearing two levels of resistance for small caps is pretty nice to see since they've been a big time laggard recently.
Yeah, is that the banks today? Like that's the banks, I believe. So
it's oil. XOP is up big today.
KRE's up
around
2%
or so.
Oh, 5%. Yes. We're gonna have less oil this.
Banks up despite rates being down.
Yeah, that's in it. Let's talk about that for 1 second. So, Jay Powell, hey, we're gonna taper. Like Jay Powell hit all the right notes today, man. I mean, rates are gonna go up, and it's not reflected in this TNX today. So, but banks are telling you a different story. And by the way, when I did weekly screen on Wednesday, there wasn't that many stocks that popped up, and like six or seven of them were banks. Like, it's just a heads up. Like the momentum, the charts tell you, the charts that pop up on your screening, whether they're buyable at that inflection point or not, the day you screen, you can get a real good sense of where the market's headed just by what shows up for what. Hunter, what you got, brother?
So just real quick, kind of in the same conversation regarding rates, pull up the dollar, Tim, because this is kind of an interesting development we've seen between the correlation between equities and the dollar and, certain types of stocks relative to interest rates and so on. What we've seen over the last week or so is really more so relating to all equities, regardless of sector, being correlated to doing well when the dollar is doing bad. And that's certainly evidenced today. Stocks struggled a little bit yesterday, and wouldn't you know it, the dollar was slightly green. So there seems to be far less of a correlation to interest rates, and that that goes for banks, oil and gas, whatever, and growth stocks, whether it's bad reaction to moves in interest rates going up or vice versa. but the dollar seems to be the driving trade and correlation at the moment. Not, that can change in a split second, but for right now, it's the last week or so, it's pretty spot on. So
can I pause you just one second? No, I think you just raised a good point. I think this is a conundrum for not just investors, traders, stock nerds, but Danny, I think that what Hunter's is talking about here, dollar strength is bad for markets. We're going to break it down simplistically. Dollar weakness, good for markets and equities.
In the short term, yeah.
In the short term. But weaker purchasing power for consumers, which leads to what? Higher inflation, right? When you have weaker, when you have rate.
Bad for the economy, bad for markets in the long run.
Yeah. And so
and bonds, which people don't realize.
And Danny's saying bonds, which people don't realize because most portfolios are 60.
Well, yeah, but if you get paid back in dollars 10 years from now, you buy to hold, buy hold to maturity, and your dollars are worth less, worth a lot less because of inflation or the erosion of the dollar, which is the same. Weak dollar is the same thing as inflation.
Right.
Those are just different terminology. So if you get paid, say you buy $100,000 worth of bonds, and then you have a lot of inflation, you get paid back $100,000 in 10 years. That's maybe purchasing power, maybe worth 90. You've got a 10% loss in purchasing power. And so a strong dollar actually is good for the economy and good for markets in the long term.
Mm-hmm.
In the short term, we've been sold this thing where it's good for exports and it's bad for imports and all that kind of stuff. And so it kind of gooses the market in the short term.
It's like a team wanting to tank to get the number one pick.
It's like the Fed saying inflation is good. They've got to target inflation at 2%. Why?
Oh, speaking
you heard everybody.
We're talking a little economics here. Hey, Don has a relative that runs a coffee shop for him in an office building. Don, are you still having labor issues, meaning that you're having trouble getting people to work?
Yes.
Yeah.
Absolutely.
And so so the routine is I typically go get the kids from daycare, and I stop at this Panera Bread. The best subscription in the world is not Netflix or HBO Max. It's the coffee subscription at Panera Bread. I am draining this company dry. They're going to have to go public to just make up for how much I drink their coffee. Like I get an update on my app. It's like,
it's like Tim and Norm and Cheers when you walk in, Tim.
Like you've saved $300 this month on your coffee. Like, and it's not special coffee. It's
you're a big coffee fan.
Yeah, like I go in there and look, they're nice. And the Panera that I go to, I double up, right? So I'm walking out with an iced coffee and a hot coffee. They say you got to come back, like you can't really double up like that. I'm not sitting in that place. I gotta get on with my day. I gotta go get the kids, right? And so, and then I fill up the water bottles. The kids like to drink the water. I fill up the little cup. Anyway, whole thing, $8, $9 for this coffee subscription, unlimited. You can do coffee, you can do black iced tea, right? But you can't do like the specialty food. I don't care. I don't drink any of that stuff anyway. Best subscription money can buy. I don't know how many people take advantage of this, but when Panera goes public, we will get those numbers. Panera's going to go public. And
I've never heard about it before this moment right now, but you're right. It's like $9 a month. It's all the coffee you can drink. That's not a bad deal.
No, do it. Yeah, can you put it on the screen for folks?
I can't actually.
Oh, okay. Do I? You know what?
You can throw it on.
Google it, stock names. Or if I say it out loud, a lot of people's phones track to what they hear, like the phones are listening. Panera coffee subscription. Show up on Facebook or Twitter feed or in your email. Now all the phones will get it.
Are you working for them? Do they pay you as endorse or what?
Danny, the only sponsor.
Let's get back to the market. Panera, pay $9.
Danny, the only sponsor we have is Danny Spice Rubs. The best thing for your meat.
Let's go back to the markets.
That's right.
Right. Anyway, so the story about Panera is what.
Oh, we're still there?
No, it's not. No, I got sidetracked by coffee. I asked Don about the coffee shop because I showed up yesterday to Panera, and 2 days ago they closed the dining room,
right.
And I thought it was because of the Delta variant. Mm-hmm. And as it turns out, I asked, so I went to the drive.
Can't get employees.
That was it. Yeah, she said the lady said we can't find anyone to work, so we had to close the front. So yesterday, I'm 3 deep in a line that's not moving at the drive-thru. Are you giving me the middle finger? Which finger?
No, I'm putting my hand up on my.
Oh, like you're interested. You're faking interest.
I'm feigning. I'm feigning interest. Okay, so they don't have enough people to employ. They're barely getting by.
No, they shut the restaurant down. Yes, I've not. That's got to be. I think I read some stories. Chick-fil-A's are shutting down because they can't find people to work. I just don't see how all this ends on. I think September 6th is when those federal benefits stop. I don't know how we just come out of this employment issue that's happening right now. Like I literally don't know that road forward because everything's hypothetical, and all these people are just going to pop their heads up and start applying for jobs.
Well, they will if you stop paying them to stay home.
I don't know if that's.
I don't know which way it works better, but it does give them negotiating power.
For this is definitely no. I'm pro-employee. Danny knows I'm a populist like that, so we'll see where it all leads. But I was curious. I thought about that. Like, I wonder if Don's having trouble because that I mean, you talk about this employee shortage. Is it really hurting Panera, or is it hurting small and medium-sized businesses that can't open up? And that, by the way, that's your single source.
All up. It only helps big major corporations.
So Hunter said we talked about dollar. Hunter, what else you got, brother? I'm sorry.
Just one comment in relation, just going back to the dollar really quick.
Yeah.
A little bit different than the common macro and micro perspectives on the dollar. You also have, so think about it this way. You've got decreased purchasing power. Mm-hmm. You got the ability to essentially earn $0 on any kind of risk-free rate, right? So the risk-free rate, going out and getting a CD, money market, like it's essentially useless. You make nothing. So all that does is it incentivizes risk-taking in an environment where your purchasing power is decreasing. You can't earn anything from a risk-free standpoint. So you more or less that incentivizes risk-taking. How will that turn out for the markets in the long run? Obviously, I don't know. But in the near term, we're seeing money flow to risk-on type of stocks, especially over the last week or two. So that kind of methodology is somewhat coming to fruition. So with that being said, I'd like to talk about a couple of stocks that are not necessarily your standard growth stocks, but you could argue that they are. Will you pull up NUE for me, Tim?
There you go.
And these, we're going to look at two here, NUE and STLD. We're going to look at NUE first.
Every time he says
my
STLD,
point here is,
I think that there's some kind of disease that there's a drug for. STLD.
What?
I always.
Tim's got his mind in the gutter. He's thinking of STD.
All I hear when you say STLD.
STD.
Yeah, that's all I hear when you say it, and I'm like, no, he said it. He says Steel Dynamics.
Well, maybe I'll just do that. Steel Dynamics.
There you go.
Just use the name. Just use the name.
I will. So these two stocks, the reason I wanted to bring them up is they're still acting very, very well after big breakouts on volume. However, nobody seems to care about them anymore. People really were focused on that big move up. They've been consolidating. My point is, just don't forget about these two in particular. Tim, if you pull it back to a monthly, saw a guy looking at a monthly chart of Nucor and STLD recently. And you can see this is a breakout that is spanning over a long time. I believe Nucor and STLD had been in bases, just now poking their head through. So maybe their run is not over. I don't think steel stocks have to do well while growth stocks do bad, or vice versa. So just keep an eye on these. What I'm really looking at is I want to see how NUE acts when it first touches the 21. It has yet to do that since its big move up to around 130. So two steel stocks to keep an eye on. Those are two of my favorite in the space, and steel is certainly one of the strongest sectors in the market, even compared to QQQ, XLK, whatever you want to look at. It's had a great year. So two other names that are not your software, your growth names that have made a decent little bounce back recently, SQM, and these are both in the chemical agriculture space. I talked about these like a week or two ago. They were starting to move up and out. Then they all had a really rough washout and sell-off where they came down, undercut moving averages. But SQM has earnings behind it. It's just sitting right on top of the 200-day, the 21, and the 8-day. They're all converging right there. And this is a company with growth. This is a company with institutional sponsorship as well. And one weird little caveat here on this name is SQM is in a decent bit of these clean energy ETFs, and I don't necessarily know what they do that has led these clean energy ETFs to want SQM in there, but I've noticed that as I've gone through the holdings that's in there. The other name, Tim, is MOS. Oh, yeah. So these are two leading stock names previously. going into like April, May. These were strong stocks in this space, and they're just now kind of starting to maybe show a little bit of positive traction back above their moving averages. At least that was the main thing I wanted to see here. Lastly, Tim, if you I talked about this on the video, and this is really more of me going back and covering something I wanted to talk about last night. Will you pull up Hack, HACK, on there? This is a cybersecurity ETF, and really, I wanted to highlight that Hack, Bug, which is another cybersecurity ETF, and Cyber, I think it's CIBR. All of those are essentially breaking out to new highs. Hack is a little bit of a laggard just in relation to the others. It's just now getting through those highs, but the cybersecurity space, not only the stocks, but the ETFs the group is moving as a whole. It's not exclusive to CrowdStrike or Palo Alto or what have you. So
is that on
we've actually on
Pan
W, Crowd had a wrap up. It's followed through nicely. So nice strength in that group.
Is that the best stock in the group, PANW?
Not recently. After the gap up, maybe you could argue that it is. My personal answer would be CrowdStrike and FTNT. You could also possibly say Zscaler. Those are probably the top three, in my opinion. PanW, making a new case for itself with the changing character on this gap.
That is
honestly
definitely changing character. I'm sorry.
I got one last little thing here, Tim, that's I think is kind of interesting. Will you pull up ASML for me? And the reason that this is interesting, you can see ASML is up, 3% today. It's at all-time highs. It's at the third ATR. It's above 800. Now, Tim, will you pull up LRCX?
There you go.
Now, these companies do not do exactly the same thing. However, they are in the same industry group. They're both in the semiconductor equipment space, and one does not look like the other. Tim, will you also pull up AMAT? Same situation here. One is at all-time highs, has been in a really nice uptrend. The relative strength has been really, really nice. And these other two have been consolidating and are getting close to the 200-day. And so I did a little research really about a week ago looking at, why is ASML acting so much better than these other names? And ASML is in the lithography space of semiconductor equipment, which I won't bore you with all the complex technology jargon. I really don't understand all of it. But they are dominant in this EUV space, which is just an acronym for the lithography space. And it seems that they are not very sensitive to changes in price because they essentially have a monopoly on this EUV system. And this EUV system, they only produce about 50 of these a year, and they each sell for $150 million. So it's a little bit different than what LRCX and AMAT do. Mm-hmm. However, it appears the market seems to like ASML. Maybe they have more pricing power. They're less sensitive to changes in demand. They're heavily, heavily supported by TSM, Intel, and there's another company, I believe it's Samsung. Actually, all three of those companies at one point several years ago when ASML was just getting into this EUV technology that they licensed, those three companies purchased significant stakes in ASML and have graduated. And just one last little stat here, because I do think it's interesting. The first EUV machine, which these machines are used to produce semiconductor chips, was rolled out in 2016. Since that date, ASML is up a little over 800% over the last 5 years. So it's obviously been received well by the market since they started using this technology. So I know that's a long kind of detailed analysis of these companies, but I did think it was interesting because there's a pretty significant divergence from the top stocks in that group.
I enjoyed it. I enjoy the research everyone does. All right, Alex, you are up next.
Yeah, so we'll follow up on two stocks. Then I have one new idea that I'll bring to the table today. So the two follow-up stocks, the first one was Align that I brought up 2 weeks ago on the bonus stock video. Mm-hmm. You could find that on YouTube.
Oh, hold on a second.
This one's holding the.
Look at Alex, the pro. What is this YouTube you speak of?
Just
tell me about
type in Revere Asset, and you'll find our channel.
And
there's a big red button you just saw at the top right of his screen. Subscribe, and then each of our videos, make sure to like them. It helps the algorithm, and it helps us out. So maybe you guys can, we'll give you stock ideas, and you guys just give us a simple like. Pretty good trade, I'd say. So back to,
go ahead.
Yeah, that was the last video. This stock is ramping higher, and that was on Team Atlassian. And I bought that at the gap high, and that's followed up pretty nicely. I've been really focused on big volume gaps, especially in this market. And if you see a stock like this hold, like I spoke about in the video, keep that front and center. And it's following up nicely. It's right in that 8 EMA. I think that's the purple line right there, or that's the 5-day actually.
Yeah.
So it's even stronger. I mean, it's extended, but if you properly size it, and then I'm using the 21 as my stop, so I'm going to give it some room. But for right now, it's working. And so is a line that I've been holding for several weeks now, and it hasn't shaken me out. It's held the 21 nicely, and it's close to all-time highs. The next stock I want to talk about.
Was this the one that you did is this the one, and I forget, which one did we talk options on the podcast? Was it a line?
I think it was NVIDIA. On the podcast, I think it was NVIDIA.
I just wanted to know how they were performing, because
I sold those for plus 200%, so they worked out pretty nice.
We need to do follow-up videos on this, because they don't. I think
we want the evolution of your trade. We want the evolution of the buy.
I actually have an option.
Monitor it through until you sell.
So the bonus stock videos, I haven't done an option. I haven't done an option video for the bonus stock videos yet. But I do have my idea for today. I have an option that I would like to talk about.
There you go.
If you could pull up NET,
sure,
NET.
Mm-hmm.
So this is in the software security space. They do firewall stuff, and it helps with the searching for companies. And they're different than, let's say, a CyberArk or a CrowdStrike or a Zscaler, but they're new. They have a big contract with Microsoft. Great fundamentals, but my idea is these are leaps, and these are long-term options. Okay, leaps are options that are 9 months or further out, so you have a lot of time premium. I'm looking at the January 2023 calls, the 140s, and what caught my interest on this was there was 5,000 open interest on the 140 contracts. That's telling me that there's someone or some institution has a big position on those 140s. I like the stock. And here's the other thing. If the stock goes up 20%, let's say, so it goes up $24 from here and it goes to 144 in the next, let's say, 5 months, that option will most likely be up 80 to 120%.
Let's do
because
it.
The time value, because you got 500 days or more on that option.
Give me your price move. One second, Alex. Give me your price move, real quick.
So let's say it goes to 144, which is 20%, about 20% from the current stock price.
In what time frame?
The next 6 months.
6 months.
Let's say by
December.
Let's say by January.
January 22. We'll just use the third week. 1, 2, 3, and you said how many dollars?
Let's say it goes up to 144.
Perfect. So now that I've got the theoretical price in there, let me get my marker back up. So what I did, stock nerds,
Tim, I think you might have to put that as like plus 20. I think it's saying net's going to be 270.
Yeah. That would be huge for the option. Go to so
thank you.
Plus 20.
Hunter, thank you. Thank you, Hunter. Appreciate that. So grateful. Here we go. 140. So this is where it would be. So I'll do it. I'm going to just reset the price real quick, and we'll do the drill again. So here's the 140s. 140s. You can see they're pricing out at 21 right now. Okay. So now we're going to go up here to the theoretical price calculator. And Alex just picked an arbitrary date. Could happen sooner.
Yeah.
Could happen later.
Could happen.
It doesn't have to happen at all. It doesn't. So we'll go with third week, which would be maybe it's the 21st. It's the 21st would be the third week. That's usually monthly options expiration. And you said
that is
plus $20. Is that correct?
Yes.
Done. And so that option that costs you 21 right now, if it were to hit what Alex is saying, would be 8 points at that point. Does everyone see what I'm looking for?
Would be, how much would it be?
Yeah, I see.
Yep. Theoretical price.
So it'd be at 28?
Yep.
Okay, so it's not as much as I thought it would go up. But, I mean, if let's say the stock goes to, I mean, you still have another year or two of time value at the time. You don't have to sell. That's the benefit of having a lot of time value in your option. You have a whole nother year by that January. If the stock has earnings and gaps up even further, because once you get that intrinsic value too, if the stock goes to 160, now your option, no matter what, without the time value, is going to be worth that $21. So you've now met your cost on your option. My stop on this, I usually give it about a minus 20% on most options, but on this leap, I'm giving it like 25%, a little bit more, because of how much time value it has.
So let's do that drill real quick. Give me the price to put it. What if it went down 20? Does that work? Yeah, let's see because we should show the risk.
I'd probably be out by then, but
sure.
Because I usually, that's hard to say because you've seen it on volatile days. The market makers will skew things and drop the bid from underneath you. So you don't want to have an actual stop out there. You have to use your own mental stop and watch it yourself. These you can't just buy these and go to work and not check for weeks. You got to check it every day. Like you can log into your account. It takes 10 seconds for people that follow markets to see your position, see where your price is at, see where the stock is, and that's it. And do a little homework. You can't be lazy with these type of options. Are a little bit more risky than buying a traditional stock.
Well, that's why position sizing is important, and you can only lose your premium if you're buying. If you're buying them, you can only lose your premium. So even though you may lose 100% of your premium, if it's only $300, you only lose $300.
Yeah, I'll be interesting to see when we circle back around this in coming months. I'd like to follow up on this position because
absolutely,
I haven't done one of these in a long time.
No, we should follow the evolution of this trade.
Yeah,
I'll let Don handle the pronunciation of evolution. It's evolution. For
evolution. They're both correct. They're both correct.
It's not going to be evil, I promise.
I don't know.
By the end of next week, I want to get Dan to say evolution and Tim to say index instead of indices.
Oh, why are they? Is it the internet?
You're fading in and out a little, Don. Say
He's
something.
Here. I got him. Don, we can hear him.
Okay.
Can you hear me now?
Oh, that's much better.
Yeah, you sound much better.
It's much better.
Much better. Okay.
I want to get Dan to say evolution.
Evolution. Is that better?
Index instead of indice.
Oh,
indices is plural. Indices is plural. Index is singular.
Just a little insight into what goes on in my mind when I listen to.
Oh, you're right.
That's it for me today.
Okay, awesome.
Our content.
Yeah, you're up. Take us home, Don. Take us home.
What you got, Don?
So we started in our daily videos tracking something that I'm calling the G5, which is an index of 5 growth ETFs that provide insight into what's working and what's not working in the market, specifically to growth stocks, because that's where we traffic. This was one of the lessons learned that came out of our deep dive into the stealth bear market in growth stocks that happened in mid-February. And over the last week, this has been given us a good insight into exactly what's going on today. For example, the markets are reacting very well to Jay Powell. The S&P is up 0.8%. The G5 is up an average of 2.2%. And this is with Apple, Amazon, and Microsoft underperforming the NASDAQ itself. So they're actually kind of lagging a little bit today. But this is a good risk-on metric, and it really showed early weakness in mid-February, right as the stealth bear market was grabbing hold. And it's an excellent metric to keep track of what's going on with growth stocks, which seem to be working very well today. And follow up on the dollar. That is a great that 3 ATR, when Tim showed that 3 ATR chart last week, and he scrolled back to, I think it was a couple months ago, where the dollar got up to the +3 ATR. There's times to use, in my opinion, times to use these ATR charts and sometimes to not use them because they can be a hindrance. This is a perfect application. Things that move slower, when they get to their extremes, it's time to pay attention to it. Now, contrast that with DraftKings. You brought up the +3 ATR before on DraftKings, if you can bring that up again. If you used 3 ATRs, every O'Neill breakout would probably be at a +3 ATR before you bought it. So gross stocks in a bull market, this wouldn't stop me if DraftKings broke above the 60 level here to add more to the position.
Can I make a comment on DraftKings?
Yeah.
Since it is somewhat my
No,
baby?
absolutely not.
Okay. All I want to say is those are double inside days right there. Butting its head up against 60. The 21 is now hooking up through the 200, and the 8 is probably going to catch up with price here in the next day or two. So I would set alerts at the high of, I guess that would be Wednesday, which is like 60.37 or something like that. If it blows through those highs, I would get ready, because it can move pretty quickly like it has the last few days. And one last thing as well, Tim, will you pull up XBI? I covered this in a video maybe last week, maybe Monday. I'm not sure. I can't remember, to be honest. This is the biotech ETF. And I mentioned if we saw continued strength here and pushing through these moving averages, pushing through 129.66, which is the high from like 85, 86, that would be a sign of strength, kind of confluent with what Don is mentioning with the G5 index. You could also maybe even factor in, biotech is a very good way to evaluate risk on appetite as well. But XBI blowing through the 50-day, getting back above it for the first time since late June. So a little bit of a change in character in biotech. There's been some volume on some of these names too, but that is another metric or proxy you can use to evaluate the demand or lack thereof for risk on type of stocks. So
I highlight
that's it.
Yeah,
Don, we'll go back real quick 1 second, because Hunter brought up something that might seem, it's a good point Hunter just made, but it might seem like, well, when should I get in, or like what's the, we talked about trigger events at the beginning of the show is what I'm getting at. So look, on my charts, the purple line's a 5-day, here's an 8-day, pink line's a 21-day. And I use the 5 through the 21 on my weekly example in the video I did this week. Look, the 5 through the 21.
Can you show the chart?
Got it? Oh,
there we
sorry.
go.
Yeah, that happened here. The 5 moving through the 21, even though it's a daily chart, the trigger still works the same. So if you've got, like Hunter mentioned this 2 weeks ago or a week ago, whenever you mentioned XBI, that trigger event happened at, we'll just call it 126. Now you're at 130, 133. And so if you got something on your radar, get a trigger event. I think,
and they're talking about adding more to the position if the momentum keeps going.
Right. And I'm saying, yeah, like, look, just because we say something, you at home, if you're, clients get the benefit of doing all this with us, but if you're at home doing this on your own, trigger events help you stay on the right side of the trade is kind of where I was getting at with that. And you can see when you have something on your radar that's brought to your attention for a reason. Okay, now when would you get into it? And there's the trigger. So anyway, I'm sorry, Don. Go ahead.
Another, Hunter mentioned that it's about monitoring XBI. That was actually one of the candidates for finalizing the 5 that I wanted to use in the G5. But biotech can be skewed on a daily basis if one of the top holdings is a positive or a negative event. But actually, during the February sell-off, looking at what would have been the best methods to hedge, LabD, which is inverse biotech, actually would have been the best hedge as a risk-off way. You talked about the UVXY and how terrible those things can be.
Oh,
yeah. LabD, but there is an ETF that's coming out that's going to be a very good way to hedge growth stocks. Somebody's putting together an inverse Cathie Wood ARC K.
Oh, that's is that? Oh, really? That's interesting. I did not know that.
Yeah. Yep. I think it's going to be SARK is going to be the ticker.
Will that actually?
We've talked.
Yeah. Will that actually affect what's it going to be called? Whoever said the name.
SARK.
I think it's SARK is the ticker.
Oh, what is SARK? Okay.
It probably won't affect because they have enough volume. She's
short arc.
Highly volume.
Thank you. So, will that, if more money goes into SARK because of the way stocks work, will that have an effect negatively on ARK? Like no matter what the company.
Depends on if they're getting the options exposure by way of having derivatives on the actual underlying holdings of ARKK, or if they're actually just trading options on ARKK itself.
Yeah, right. Because the option. Yeah, I think.
Well, you can also borrow the shares within ARK and short the shares.
Yeah, I think the way Hunter just said it matters because it's not if it's just ARK, if they're just working in ARK, but if SARK is going in and pulling positions off the names that make up ARK, which change daily. You can get that report every day.
I would think that's not going to happen just because of the complexity required to get that correlation to, because their job is to get, a 2 or 3 times move, whether it's to the upside or the downside by way of that derivative exposure. And if you're trying to allocate that and weight it on a daily basis based on how the underlying holdings are changing, it'd be damn near impossible. My thinking is it would be more tied to the actual ARKK security itself.
Be interesting. I'm really curious. I had no idea.
Either way, it'll be really good for us because it'll be another tool.
Yep. Sorry, Don.
We've talked in house about finding a good hedge when small cap, mid cap, small or large cap growth sells off for the day. There really hasn't been a good one because the VIX is not only toxic and unpredictable, but it's tied to the indexes. So the Qs are really at the mercy of what's going on with the big tech companies. IWM is really at the mercy of what's going on with oil and banks those days, and there really hasn't been a good way to temper volatility on days that the market just decides to sell off growth stocks for no reason at all.
Isn't it something? Like Cathie Wood has such a mark on her. Like she put together an ETF that has had wild success.
She's doing okay.
I know,
still doing okay.
But
she's crushing it this last 2 weeks. She'll be fine. Multi-millionaire. Yeah, she did. That should be fine.
Very interesting. Go ahead, Don. What else you got, brother?
Check. Tune in for the 2121 list. We've had some nice winners on there, and I'll update that in Friday's video.
And by the way, real quick, where you get the 21, I'll tell you what, Danny. Let's do. Why don't you tell them where to get the 21 over 21 and all the other good stuff? And then I've got one last.
Folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. They can sign up for our daily market insight video. This podcast will also get that directly in an email. And right up there, you'll see the daily market insight. They're all of our daily videos. It's also the podcast in order. We don't take anything down or edit anything. You can email any of us with questions, Dan at revereasset.com, Tim at Revere Asset, Don at Revere Asset, Tim or Hunter at Revere Asset. You can also call us old school at 855-REAL-WEALTH.
So just one real simple one last thing. I had a couple requests for screens this week, and what's happening I touched on this at the top of the show. What's happening geopolitically, and I think a lot of it is throwing people off just based on a couple of things that have come inbound to me. And look, I am more than happy to share any of my screen with you. And the screens themselves will help you unless you understand what they're trying to do. And the screens I use just try to help me keep on the right side of market. So whether it's a trigger event like 821, let me see if I can load scan for you. Like whether it's a 521 cross on a daily, 821 weekly cross, moving average alignment scan, which is one of my favorites because it where's the stock sitting on the 821 to 34. All these things are just tools. Like Don will send you what he's looking for in screens. Hunter will tell you what he's looking. I mean, Hunter's doing research throughout the wazoo. And it's Alex as well. but if you don't understand what you're looking for, and so the screens help keep you on the right side of markets and separate what's happening outside of markets, and they're two completely different things. That doesn't mean they can't coincide at times. This week is just a great example of that, and hopefully we can bring some calm to what you're doing, because I think it gets really confusing just based on a couple of emails or direct messages that we see this week. I think it can get confusing for investors out there, and screening helps you stay on the right side of the market. The answers are in there, but not all of them are the answers. And so hopefully that all makes sense.
We'll talk to you next week on Your Money.